Hey there everybody. In today's lecture, I will explain and then backtest the easiest and simplest ICT strategy, which is silver bullet strategy. So in the first part, I will explain what is the silver bullet strategy, and in the next part, we will backtest it to see what is the win rate, and also it will help you to understand how I execute or take these trades. So if you have already watched my lecture on the silver bullet, you can skip the first part and you should watch the backtesting part. But if you are new, you should watch the explanation part first, because you won't understand the backtesting process if you don't understand what is the ICT silver bullet strategy. And my strategy is totally different from the others, because what they normally teach you is to enter into trade when you see a fair value gap. But my strategy is different, and I don't just enter into every other fair value gap. There are certain FVGs which I choose for entry. Okay, so first I will explain what is the silver bullet strategy. So in silver bullet strategy, you just have to trade between two hours, that is the 3 to 4 am and the 10 to 11 am, and the timing is New York time. Okay, let me show you. You can change it from here, the time zone, to UTC New York. So then you have to trade between 3 to 4 am and 10 to 11 am. Now there are certain structures during this time, okay, which you have to look for, and then you have to enter into your trades. First, I will explain the bearish case. Okay, let's suppose the price is going down like this. Okay, then you get another candle. Normally I use 5 minutes, so you should suppose that this is the 5-minute candle. Okay, and then the price goes down. Now you can see a gap between the bottom of this candle and the top of this candle. This gap is called the fair value gap. Okay, this is called the fair value gap. Now what happens in this time period, 3 to 4 am, is that the price goes up into this fair value gap in the bearish case, and then it starts going down. Okay, this is what they teach you, and you have to put your stop loss above the swing highs. Okay, above the recent swing high. So this is the bearish case. Now in the bullish case, the price goes up like this. Okay, then you get the next candle, price goes up, and again you get a candle, and you see a fair value gap. Okay, the bottom of this candle and the top of this candle. So when the price goes down into this fair value gap, this is where you enter into longs, and you put your stop loss below this swing low. Okay, this is what everyone teaches you, but there are some other things. In trading, you have some pairs which are correlated. Some are directly related and some are inversely related. Let me show you some examples, like AUD and NZD. Okay, then there is Euro and GBP. They are directly related. If the price of Euro goes up, the GBP also goes up. Now in crypto, there is Bitcoin and Ethereum. If the price of Bitcoin goes up, Ethereum also goes up. In indices, there is Nasdaq, okay, and SPX. Okay, there is Bank Nifty and Nifty. They are also the correlated or SMT pairs. So these are some of the examples. Okay, if price of one pair goes up, the other one also goes up. And there are some inversely related pairs also, like if the price of Euro goes up, the DXY goes down. Now there are some divergences between these correlated pairs. Okay, let's suppose this is the price of Euro. Okay, Euro is going up like this. Okay, and let's suppose this is GBP. Euro is going up, so GBP will also go up. Okay, now you can see that both are going up, but here at certain point you get this divergence. You can see that here this low isn't swept. Okay, so the price of the Euro don't go up, and in this case you can see that the price of the GBP goes up. So you get a divergence like this. Okay, this sign, this is called the bearish divergence. The divergence that you get at the top, this is called bearish divergence, and after bearish divergence, the price goes down. Now there are some bullish divergences also which forms at the bottom. Let me show you. Let's suppose this is the price of euro, okay? Euro is going down. Now let's suppose this is the GBP, okay? Now you can see that the euro didn't sweep this low, but here you can see GBP sweeps this low. So again you get a divergence, but this time at the bottom. So you get this sign. Now this is bullish, so you can see the price starts going up. So in silver bullet, you also have to look for such divergences, okay? I will show you these divergences in this example. This is Nasdaq and S&P. Let me show you some divergences and it will clear up your mind. Okay, so here you can see that SPX made a high, okay, but then the price didn't sweep this high. And here you can see in case of the Nasdaq that the same high was made, but then Nasdaq swept this high, okay. So this is the bearish SMT divergence, and you can see then the price starts going down, and here you can see it sweeps this low, okay. The low is swept, and here you can see this candle, this isn't swept, okay. So again the price starts going up. So this is called the SMT divergences. There are some bullish divergences and some bearish divergences. I hope the divergences are clear. So also in the silver bullet strategy, you have to look for such divergences during the 3 a.m. and 4 a.m. and 10 to 11 a.m. So if there are bullish divergences and then you get a fair value gap, you have to enter into your longs, and if there is a bearish divergence and you get a fair value gap, you have to enter into your shorts. Now I will backtest it and I will show you these divergences and these examples, okay. I hope till now it's clear. You have to look for these fair value gaps, but the first thing is divergence. If you have divergence, then you have to look for these fair value gaps, okay. If you have a bearish divergence, you have to look for these bearish fair value gaps. If you have bullish divergence, then you have to look for this fair value gap to the upside, and you have to enter into your longs. Okay, so now I will backtest it for the month of August, and let's see what's the win rate of this strategy. Okay, so now comes the next part, which is backtesting, and I will backtest the S&P and Nasdaq. Okay, I will backtest 10 trades. We will see how many trades are winning trades, and in the next part I will backtest another 10 trades, and that will be according to your wish. You can tell me in the comments which month should I backtest for this strategy. Okay, now this is 3rd August. I will backtest it from 3rd of August. So let's see what happens. Now you can see this is the 3 to 4 a.m. window. I will forward it. Let's see what happens. So the price is going down in both S&P and Nasdaq, but still there is no bearish or bullish divergence, okay. And the price is still going down. Both swept these lows, so still no bullish divergence, okay. Again the price is going down. Okay, so you can see that there is still no bearish or bullish divergence. So we got no trade on the 3rd of August, 3 to 4. Now I will forward it to 10 a.m. and let's see if we get any trade at 10 to 11 a.m. Let's see. Okay, so I will slow it down. You can see that there is bearish divergence, okay, between the Nasdaq and the S&P, okay. You can see that one pair swept this high and the other didn't, okay. Now if I get any fair value gap, I will short it. So let's see what happens. Still no fair value gap. Okay, now there is a fair value gap. Okay, so let's see what happens now if that gaps get filled, or if we get a bullish fair value gap to the upside. Okay, so here you can see that we were waiting for this gap to get filled to enter into our charts, but before filling that gap, we got another fair value gap to the upside, and we got this bullish divergence. So now our entry point will be this. First, we were waiting for this fair value gap to get filled, but then we got bullish divergence. So now this is the fair value gap that we will use for our entry. So let's see, and we will target 10 handles. Like in S&P and Nasdaq, we target 10 handles usually. So let's see if this gap gets filled. Okay, so this gap got filled, and let's see. I can't count the candles, but the handles, but let's see. Okay, I think this is already more than 10 handles, so you can take profits here. So this is a winning trade. Okay, like this is already 10 handles from 15305. This is more than 10 handles, so we got a no trade during 3 to 4 a.m. and then we got a winning trade at 10 to 11 a.m. Now I will forward it to the next day. So let's see if we get any trade 3 to 4 a.m. on the 4th of August. Okay, so far we got one trade, and that was the winning trade. Let's wait for this one now. Okay, so I will stop it here and slow it down a bit. Now entering into this window, there is no bearish or bullish divergence. Let's see what happens once it enters. Okay, so all these lows are swept, so still no divergence. Now you can see that, let me check it, if this candle went below the previous one. These are the equal lows, still no divergence, if I'm right. So no trade during 3 to 4 a.m. again. Okay, here if this candle, it depends on this candle. If it has swept this low, then you can use this fair value gap for your entry, but I don't think that it has swept, so no trade for me here. So far we got only one trade. Now I will again forward it, and let's see if we get any trade during the 10 to 11 a.m. Okay, so now I will slow it down. Let's see if we get any trade now. So you can see that this low isn't swept here. Okay, in the case of S&P, and here this low got swept. So now if you get any fair value gap on the 5 minute or 1 minute or 3 minute, you can enter, because there is a clear bullish divergence. So let's see if there is any fair value gap on the 5 minute. Yeah, there is a fair value gap here. Let's see if it gets filled. You can also use smaller time frames like 1 minute or 3 minute for entry. So it didn't get filled, the fair value gap didn't get filled on the 5 minute. Let's see if it got filled on any other time frame. I will check it for the 3 minute. So you can see that after this divergence, the gap got filled. Okay, on the 3 minute. Okay, can see this is the fair value gap. It got failed on the 3-minute, so your stop loss is below the swing low, and we got our second winning trade on this strategy. Let me change the color to green. So far we got 2 trades on this strategy, and both are the winning trades. Now I will forward it a bit more. Let me shift back to the 5-minute. So when you have a clear divergence like this, okay, you can shift to smaller time frames. If the divergence isn't clear, then you won't shift to smaller time frames. Okay, so I will stop it here. Now let's see if we get any trade on this day. This is the 7th of August. Okay, I will slow it down. Let's see. So both swept these highs, so still there is no divergence, no bullish divergence, no bearish divergence. Okay, so we won't enter. Now you can see that this candle went above it, okay, but this candle didn't. Now this is not a clear divergence, so I won't use smaller time frames like 3-minute or 1-minute. Okay, if I get a fair value gap on the 5-minute, I will enter into shorts, or else I won't. Let's see. Okay, so this candle also got swept. Now till now we have this divergence. It swept this high, and the Nasdaq or NS 100 didn't. Let's see. Now both swept it, so still there is no divergence. Okay, again what happened? This candle went above it, so now if I get a fair value gap on the 5-minute, I will short it. So no fair value gap, no trade on this day, 7th August 3 to 4 am. Okay, I will forward it again. Okay, so let's see what happens. You can see that this low isn't swept on the S&P, and this low is swept on the Nasdaq. Let's see what happens next. So again this low is swept here. Now if I get any fair value gap, okay, I will enter into my longs because I have a clear divergence. So this is the fair value gap now, and here the fair value gap is this. If this gap got filled, this will be my entry. You can put the stop loss here or here. Okay, sometimes you should use wide stop loss, or if this gap gets filled, my entry will be here. Let's see what happened. So this gap got filled. Now we will see. Okay, so here this trade went into loss. So far 2 or maybe 3 trades are winning trades, and this trade went into loss. Okay, you can see that this one went into loss, and let's see if the S&P reaches the target. We forward it. You can hold as long as you don't get the target. Okay, so let me see how many handles are this. It's already good, but let's see. We got a pump from this point 14,500 towards 4520. Okay, 4,500. So this is 20 handles, and I think is good enough. Okay, ICT usually recommends 10 handles and 15 pips for the forex. So again this trade went into loss, and this one reached the target. So 3 trades reached the target, and 1 trade is the losing trade so far. Let's see what happens next. Okay, so let me slow it down. Now what happened here? So there is still no divergence, and now this swept this low, and this low hasn't been swept. So this is a bullish divergence. Let's see if we have got any fair value gap to the upside. There were no fair value gaps on the 5 minute. So when the divergence is clear, as I already told you, you can check the 3 minute if there is any fair value gap and that gap has got filled. So on 3 minute, you can see that there was a fair value gap here and it got filled. So your entry will be around here and stop loss will be below this swing lows. Now let's see if we get 10 handles. You can target 20 handles too. This is 46, 56, so something around here, 65 or 66. This will be a good target, okay, and the stop loss will be below this swing low. So let's see if we get this target. So you can see we got more than 20 handles, okay, and this is more than enough. So again, this trade went into profit. When the divergence is clear, you should shift to smaller time frames like 5 minute and 3 minute. Now let me shift again to 5 minute. Let me forward it. So far, 4 trades went into profit and 1 trade was a losing trade. So let's see what happens during this 10 to 11 AM window. So there is no SMT divergence so far. There is a weak divergence here, okay, but when there is such divergence, you have to wait for a fair value gap on 5 minute, okay, not on 3 minute or 1 minute. So let's see what happened next. So we didn't get a fair value gap to the upside, so no trade. Let's see if we get any bullish divergence and then a fair value gap to the upside. Yeah, so no divergence, still no divergence. Yeah, so no trade on this day, okay, no trade on this 8th of August. Again, I will forward it. Let's see if we get any trade on the 9th of August. Okay, we got here. This is 3 to 4 AM window. Now I forward it. There is no divergence, okay. Nothing to be bullish about and nothing to be bearish about, okay. Still no divergence. So there is no divergence. There were fair value gaps, but if there is no divergence, you won't enter into trades, okay. You can see that if you just enter by getting a fair value gap, you will end up into loss, okay. You can see this was a fair value gap, but the price went up. So if there is no divergence, you don't have to enter the trade, okay. Let's see if we get any trade in the 10 to 11 AM window. Now the price has entered into this window, but still you can see there is no divergences. Let's see if we get any. This hasn't swept the low, this one swept the low. Let's see. Okay, so there is a divergence, and this one is a clear divergence. Let's see if we have got any fair value gap on the 5-minute or the 3-minute. So there were no fair value gaps, okay, and the price went down. But I remember this trade, there was a fair value gap on the smaller time frame, 1 minute or 3-minute, and I entered into longs, and this I shared it in the Facebook group too, but it ended up losing trade, okay. And then let's see what happens in the next window, 3 to 4 a.m. Okay, so let's see if we get any trade here. So both swept the high, there is no divergence. Now you can see that this one swept this high, okay? This one swept the high and this one didn't. They were equal highs. So let's see what happens here. There was a divergence, but there was no fair value gap to enter, okay? Maybe on the 3-minute there's a fair value gap, but there was no fair value gap on the 5-minute. So no entry for me here too. Let's go towards the 10 a.m. Okay, so there was no divergence, no trade. Let me forward it. Okay, so let's slow it down. Let's see what happened here. Okay, so there is a divergence here. This swept the high. This high wasn't swept. So there is divergence now. Also, we got a fair value gap. So this is your entry. Finally, we got a good trade. The stop loss will be above here. And we should count the handles. With my strategy, you can go for 20 handles, okay? So we got another winning trade. So far, we have just one losing trade, okay? This one was again a winning trade. Let me forward it again to the 10 a.m. window. This one will be the last one. So let's see what happened. Okay, so let me slow it down and let's see what happened here. Okay, so before entering into this window, we got this divergence, okay? One pair swept this low and the other didn't. So we got the S&T, the sweep that we want. Now let's see if we get any fair value gap to the upside. Okay, so you can see we got this fair value gap. So you will enter around here, 15.026. The stop loss will be here. And in that case, your stop entry will be around here. Stop loss will be below the swing low. And let's target some 20 handles, okay? This case 76, and in this case we can target like we entered around 15.30. This is Nasdaq. In this case you will target 40 handles, okay? Like in S&P you can target 20, and in Nasdaq you should target 40, okay? So let's see what happened. Okay, so you can see that in both cases it reached the target, okay? You entered here and we got our target. And then boom, went down. So again, you got this winning trade. It depends upon your risk management. You should target these 10 to 20 handles, and that's enough for you guys. You can see that in 1 minute it will look like a proper pump. So these candles or these handles are enough. So with this strategy, you got just one losing trade and the rest of it are the winning trades. Now, if you set big targets, then of course it can turn into losing trades. So you have to be careful with the targets, okay? You have to be quick in taking profits. So that way it will work for you. So there is only one losing trade, and I think 5 or 6 were winning trades, and in the rest of the trades we didn't get any entry. I hope this helps. This is how I take my trades in the silver bullet strategy. If you have any questions, you can ask me. Thank you guys.